All right. Well, good morning, everyone. This morning, I'd like to introduce Dr. Cory Fafi. I've been working with Cory for, a little over a year, but more so than that, I've known Cory for several years. I actually met Cory, I think, the first time when one of my sons was looking to go to Maranatha, where he was dean of the School of Business for a couple of decades,
Right.
and was very impressed with him. And about 2 or 3 weeks ago, he and I were talking about the PPP, and I realized he owns a business called Ministry CPA, and he deals a lot with obviously ministries, but he also deals a lot with small business, large business. He handles the accounting needs and the tax needs of businesses of all different sizes. I realized he had a very in-depth knowledge of the PPP. And then last week we were talking about what do you do once you get the PPP? How do you get forgiveness? And there again, his knowledge was amazing. And so I talked to Jim, and that's why we're here today, because I think Cory has a very good working knowledge of the program and can give some good insight on what you need to do once you've got the loan. Not only how to get the loan, but once you have the loan, how you can get forgiveness for that. So with that, Dr. Fafi.
Well, good morning, and I bring you greetings, warm greetings from Wisconsin. Actually, we had snow flurries last night. So, but our day is coming. We just never quite know if that day is going to be in July or that day is going to be in August. But our governor actually earned some friends this week in that he's opened the golf courses back up on Friday. So not that any CPAs in Wisconsin or probably almost anywhere else have time to go golfing, but that's the way it is. So we're delighted for this opportunity. So yes, as Tim said, Ministry CPA, about a third of our client work each year is for churches and Christian ministries. But and I believe we'll have some folks with that background on today. The remainder of our clients are small business, not-for-profits, individuals, investors. So we enjoy serving, and people need to be served, and we're blessed to do that. What I want to do is share my screen now with you. I've prepared some materials that we can view. So I'm going to go ahead and do that. And hopefully you can confirm to me that you are seeing things. So are we able to see the presentation?
Not yet.
Not yet. Okay. I believe, host, you have to give me permission to share, perhaps. Well, let me see. No, you probably did. I just didn't do it right.
Now we're seeing it.
Okay. There. Good. Good. So this PowerPoint presentation is available on our website under those the resources and tools section there. Actually, late yesterday afternoon or sometime in the afternoon, Senate got its version of what they're calling the Paycheck Protection Program and Healthcare Enhancement Act. I don't have an acronym for that yet. We've got too many acronyms anyway. But some folks have said, well, no, this next version is going to cut out some of the people that were eligible initially. Well, of course, it's got to meet with the House tomorrow, is my understanding. But what I saw was essentially just an increase in appropriation for what existed. So it's Division A, Section 101 of that act increases the PPP appropriation from $349 billion to $659 billion, and there's some more economic injury disaster loan money as well. So as best I know at this point, we're going to just have some more money available to do what we hope to be able to do. So here's the topics that we're planning to cover this morning. We'll do some review. Most of us are probably overexposed to information about getting the loans. Perhaps now ready to turn if we've gotten a loan, a PPP loan, Paycheck Protection Program loan. Now we're looking at the forgiveness. So we'll just review that very quickly, but then talk about the forgiveness aspect. from kind of extremes. One extreme, entities that have employees, perhaps significant number of employees, to entities that have none. We'll look at some other opportunities that are in the CARES Act that haven't gotten a lot of attention yet. And then I want to share some thoughts just from a CPA about what maybe we might be facing after we deal past the COVID. So this list of 4 steps, and probably been added to at times from our client experience, we've gone over a number of times as far as exploring the PPP loan program. So I want to just talk quickly through this. Of course, we've all been advised to contact their financial institutions. We're finding quite a variety in expectations, especially early on. The banks and the financial institutions were struggling a bit themselves, as were a lot of us, as to what was expected. So contacting the financial institution has been one of the first steps. Then, of course, calculating the loan, preparing the application, preparing the documentation, and we'll review that very quickly in the next slide. And then estimating the expected forgiveness amount. And initially, a number of the banks were saying, well, we got to have this data from you fairly quickly. They stopped asking you for your utility bills and such. But of course, this is important in decision processes, whether to pursue the loan in the first place, if you're going to be saddled with a bunch of debt that you're going to have to carry forward, or if it's going to be forgiven. And then the last step is after the 8 weeks expire and the forgiveness is determined and you have a remaining balance potentially, what do we do with that? Do we just pay it off right away plus the 1% interest that's been accruing? Do we hold it for 6 months and not make any payments, but understand that maybe there's going to be some more contingencies happening to our enterprise? We might need those funds. Or maybe just let it ride. It's going to be a 10-year amortization with a balloon in 2 years. So those are those post-forgiveness alternatives that have to be considered. So let's just review a bit the covered payroll for a PPP loan and what we view as the best documentation. And we're probably talking here like an S corporation, a not-for-profit organization, a church. So this list probably looks familiar to many of us. One of the things in number 1 that we've had to address, and maybe if you're a church or a Christian ministry, you may have had to address it, was what to do with housing allowance. Once we've documented it and kind of communicated with the bank some statutes that they can rely upon, we've not had any trouble with that, but that is a part of compensation. Of course, at the end, divide by 12, multiply times 2.5 to get essentially 2.5 months worth of your cash flow demands in 2019 for covered payroll. The opposite extreme, which didn't open up that first week with the first batch, was the independent contractor. And I'm talking the extreme because this would be an entity with no employees. And so this is a calculation based on self-employment income, typically Schedule C, maybe Schedule SE, limited to $100,000 consideration. So that would be divided by 12 times 2.5, and that's where that maximum $20,833 loan amount. So that's perhaps a review, probably a review, but that's just probably good to get that on the table. All right, let's talk about, and you can see I'm already, maybe you can see where I'm halfway through the slides. So there's not a lot of slides here. I'm hoping to leave ample time for us to discuss and perhaps some questions or your comments or other input from some of our participants here. So on the forgiveness side, we're looking at those very same calculations for covered payroll for 8 weeks, plus utilities, rent, interest on secured debt. And that list is probably pretty familiar to you. There's some mystery about those various things. I'll touch on it briefly in a couple moments here. But of course, then that calculation of forgiveness might not be your actual forgiveness, because then we have the full-time equivalent issue to address. I want to just say briefly about that full-time equivalent. So there's a fraction that we have to apply to this. The numerator is going to be our average FTE of employees for the 8 weeks after we sign the note. The denominator of this fraction is one of 2 ranges of dates. One would be back in 2019 There's a date range from, I believe it's mid-February to the end of June, looking at what was our average full-time equivalent of employees during that period. Or in some cases, and several of our clients are actually looking at to say, well, January and February of 2020 is a better, more beneficial denominator for us. So that determines the portion of the forgiveness you've calculated that you'll be able to enjoy. Again, on the opposite end, we're talking about this independent contractor or self-employed business has no employees. Well, what is this in for me? Well, that is this 850 seconds that we're seeing. There's a need for some more clarification about that, but it appears that it would be simply 850 seconds of what your 2019 Schedule C income was. So a little easier on the FTE calculation, plus some of those same costs in utilities, interest, rent, etc. Now, if you happen to grab the PowerPoint, you may observe in the notes page view, there are some materials there that might interest you. And on this particular slide, I've inserted a fair number of questions, kind of just brainstormed what would be some questions that maybe I don't have answers for yet, or we've been asked. And there's going to be a lot of them. Some of the resources that we're seeing out there are excellent. I'm a member of the American Institute of CPAs. Perhaps your CPA, your CPA probably is as well. They've had some good materials. They've been trying to help communicate what the profession is interested in seeing happen with some of these rules that have followed. And there's been some other good resources as well. They're asking some of the same questions we are. So, for example, in utilities, one of the items is something that at least I, as an accountant, have never considered a utility, and it's the word transportation. Well, what do they mean, transportation and utilities? Well, according to the Small Business Administration, they came out with, get this, an interim final rule. I don't get that. It seems a contradictory of term to me. Interim final rule came out about a week ago. And in that interim final rule, they said that transportation as a utility includes cost of vehicles, gas. Okay, well, that's good to know. That's, in some cases, a pretty significant cost to factor into your loan forgiveness. Here's one. What will my financial institution require for documentation of loan forgiveness? So we have a number of clients that have self-rentals where it's a manufacturing firm, let's say. The building is owned by a family partnership. A rent is based on a lease, but is the bank going to require a copy of the lease? Is there going to be a consideration as to whether that's really a fair rental value? Don't have an idea about that. I would encourage you, when you think about preparing for that documentation, I've heard a couple of opinions about this. Some have said, oh, I'm very nervous about this. I'm going to put all this money in a brand new checking account someplace, and we're only going to spend it out of that account. And well, I'm less interested in that, I think, versus keeping your quality accounting system going as is. I believe if you had a good system prior to this, you're going to have access to the information you need. You're going to have payroll summaries, either from your own software or from your provider, your processor. You're going to be able to look in those same utility accounts, pull those data up. I'm thinking stay with what you got. Yes, be careful. Some of the questions that have been posed even prior to our gathering here was, well, what about bonuses? Can we give bonuses? I'd be careful with that, especially bonuses heading out to stockholders, major stockholders. But there have been additional costs, additional times. Maybe you have salaried people who've been putting in the extra effort and they've had extra costs because maybe they had to purchase some upgrade to their internet at home or so that they could telework. I think that's justifiable. We're probably going to wait for some clarification on that. And then again, there's a bunch of questions there. I'll just tackle one more. What about the taxability of your loan forgiveness? And I could go either way on this. The accountant in me says, well, wait a second, I can see if you take this, this, and this, What was congressional intent, and what's the letter versus the spirit here? But that's a question. I have my own ideas, but ultimately your CPA's ideas, my ideas, they may not fly, and we have to get some clarification. I think you're going to really be relying on your CPA, your accounting help, your legal help at this time. We've all been spending a lot of time in normally a busy season for us to try to help our clients. And I'm sure your CPA, we've been doing as best we can to help, and we have some more things to learn, but you're going to be relying, and that's a good thing. Other provisions, this is pretty quick here. There's the employee retention credits. There's also some things coming out of the Families First Act, which passed a week or so before the CARES Act, of up to $5,000 of refundable credit for 2020 wages. You might not get all of that, but that can be some help if you didn't participate in the PPP. A delay of 941 payments for quite a long while. That's if you get no forgiveness. Maybe just a couple more provisions of CARES Act. There's one that I've really liked, and I've communicated this with some of our church clients. It's the ability for an employer, just in 2020, to pay up to $5,250 on an employee's student loan, and that payment is not taxable to the employee. So we've had at least 2 churches that we've been in contact with. They're concerned about trying to help their pastors to reduce their student loan debt coming out of Christian college. And they've been excited about this, and they've been prepared to do it. And so I think that's going to happen for them. The whole area of unemployment benefits for 501c3 organizations has been a bit of a mystery, but there's some openings there. The question is, can church employees who are laid off receive unemployment benefits through their state unemployment divisions? We don't have good clarification on the church side, but we've kind of said, apply. If that's the case, apply, and we're just going to have to wait for some judgment there. One last slide I want to be able to share, and these are just thoughts from one CPA to you, and your CPA and you yourself probably been thinking about these things as well. But so number one, as a former educator myself, I've taught both a lot of face-to-face classes, but also a lot of distance ed courses. And I see strengths and weaknesses in those programs. I see adult learners being able to have opportunities they didn't have before. I see young people, high school students, benefiting from those programs as well, particularly financially in their families. But I wonder about some of the communication skill development, time management skill, some of those areas that I think we need to be prepared to help those employees. Listening skills, and that just might be a reality. Teleworking. I think some employees after teleworking might say, boss, can we just keep this up? And you might not feel that that's best, and that may be something you're going to have to sort through. It's been a stressful time for banking relationships. And I've probably worked with half a dozen banks here in my community. Some are, just awesome. I don't know where they're getting all this time that they're in the responsiveness, but I'm thankful for their efforts. And some have, it depends on the more attorneys these banks seem to have, the longer it takes them to process things. Others have really struggled, and sometimes we're revisiting those relationships. I wonder if contracts, and this is where our attorneys are going to have to help us here, but what about the contingencies with regard to emergencies? And I've probably built some of that into the contracts, but I think buyers and sellers are going to be more conscious of that. And then there's this whole, let's revisit where do we go from here? What are our objectives? So what happens to that 10-year plan, that 5-year plan? What about debt aversion? Maybe we need some new metrics, both predictive and just to tell us where we've been. Retooling. Maybe we need to get ourselves into the essential business category. So I don't have answers to those things. Maybe you're going to be processing or already have processed those things. But that is my attempt at a quick, I guess that was about 20 minutes. But let's talk about your questions. I'm going to stop sharing my screen, and let's find out what comments we're getting and maybe how we can help one another. I believe there's also the chat possibility if you like that approach.
Thank you, Cory. That was excellent. We've got another CPA on the line who works closely with Broad Insights as well. I don't know if he had any comments, certainly not necessary, but I thought your comment, especially about how to become an essential company post-COVID-19 here, or in the future, there may not be a post-COVID-19 for quite a while, was an excellent thought that's very strategic. And I'd love to get input from anyone on that as well, how to become an essential business. But please, what are your questions? This is for you.
Hey, Cory, this is Steve Ivester. I am one of the services we provide are payroll. And so had clients who have asked, is the liability the pay period, or is it the day you take the money out of my bank, or is it the date of the payroll? And of course, we know with the IRS, it's the date of the payday. So what are your thoughts about that?
So I've definitely had thoughts about that. It's kind of from an accountant speak, it's the cash versus the accrual concept. So can I delay my payroll till I sign the loan? Can I accelerate a payroll? What do I do with the timing of commissions? I would love to have a good answer for you there. In my mind, I think the IRS and SBA is going to look to your corporate filings to say, what is your method of accounting? Are you using the cash basis? Have you been historically using the accrual basis? What are you required to use? And I think that's going to weigh pretty heavy on what we can do. I think that's, at this point, Steve, about the best I can do with an answer there.
Okay. Is it true, I've heard a rumor that the final rules from the SBA are supposed to be out on the 26th? Is that fake news or true?
Well, good question, because there's been a lot of fake news. A client in Michigan yesterday said that her banker said, "Oh, none of this new money is going to be for you," and it seems like it is. But I mean, if we're getting interim final rules, I think that it'd be great. It'd be great that on April 26th, you think, Steve, perhaps?
Yes.
That'd be awesome. So early on, we were watching the Department of Labor site, U.S. Department of Labor site pretty carefully, particularly with the Families First Act. And one of my people, particularly Stephanie in my office, has been working a lot with Families First and clients trying to comply and take advantage of that, those provisions there. So it was a Friday. The Department of Labor had 21 FAQs on its website. By Monday, I want to say it was 56 or 57. Now there are 72. So I think it's really important to kind of keep our finger on the pulse of this. And the SBA certainly knows, hey, we all need guidance. We've got these loans now. Anyone else heard more definitive about this April 26th? I'd like to know that myself.
Cory, I haven't heard anything on the April 26th, but I'd love to get your take on the ERTC versus the PPP optimization process, and if you've done any of that.
The economic injury disaster loan?
The employee retention tax credit.
Oh, okay, sure. Some of the clarifications that have come out recently is because the trigger for eligibility for the employee retention seems to be your state, shutting you down. And while the Employee Retention Act or Employee Retention Credit is a 2020 annual credit, how long does that apply when, as far as how long does your state shut down its, stay-at-home orders, those kind of things? There have been some additional clarifications. You're probably aware of those, Joe, with the act. Honestly, in our office, we've kind of had to divide and conquer. I've really focused on the PPP and the forgiveness side. Another individual, Stephanie, who I mentioned, spent a lot of time with our clients who are concerned about the payroll processing of the Families First credits and the employee retention credits. So I think I might be in the same spot as you, Joe, that I'm looking for clarification. And of course, if you participate in PPP, then you're not going to get that credit.
We've tried to do an optimization between the ERTC and the PPP, but we found that obviously you have to have a 50% reduction in revenue quarter over quarter, and then it drops to 20. But we found that even if the ERTC is better for a client, most clients are opting to get the PPP because the ERTC is so, do I say wishy-washy on whether or not they'll get it or not, depending on what the government decides to do in quarter 3 and 4.
Mm-hmm.
Sometimes it doesn't become better until you hit that quarter 3 or 4. And they'd rather go with the sure thing and get the PPP.
Yeah, that makes sense. There's both that reduction in your gross revenues and then essentially the state shutting you down, forcing you to stay home. That was a big mess in the Families First Act. Initially, there were some who were saying, oh, everybody's mandated to pay 2 weeks of full compensation to your full-time people. You got to do this because your state has closed the door. Everybody's supposed to be teleworking. Others were saying, no, that's not the way it is. It's if you've been exposed to the virus, you got to pay that for somebody who's been exposed to the virus. Finally, Department of Labor kind of opened the gate and said that it applied more broadly. But I think you're right, Joe. I think it's kind of like 1 in the hand, 2 in the bush thing.
Yep.
For a lot of people.
All right, it's interesting to hear your take on it. Thanks.
Cory, I just wanted to make sure that you can see the chat. There's several questions in the chat that you could answer now if you wanted to.
All right, let me see.
While you're looking at that, Cory, my son is a state house rep. And for anyone who's either experiencing this or has an employee that's having issues getting unemployment, his recommendation is have them call their local state house rep for whatever state they're in. He has actually been able to help several people get benefits that were refused when they first applied for them. And because every state, some of them are still, holding on to their old rules. Some of them are just, they don't know what they're doing. And he has actually been able to help the process. So that's another avenue that they should go through. As he says, as a state house rep, I really feel the pressure when one of my neighbors calls me. So that's just a quick response that maybe you can help somebody with.
Good, Tim. Thanks.
Isn't one takeaway from this, Cory, before you answer those questions, which I think were excellent, isn't one of the takeaways from this is that this is still fluid and that we need to continue to monitor these things, that we don't know the answer to all the questions. Apparently no one does. And that everyone on the call just needs to recognize that to stay flexible, to keep your documentation, and that this may take a few weeks to actually finalize, or is that not the case?
Oh, that's excellent. And I would say most definitely keep good documentation. For example, someone has asked the question about bonuses and commissions. And of course, commissions, the timing of it, that's where we get back to Steve's question about cash or accrual. But so I had that. This is a client in Santa Maria, California yesterday who has a significant ministry out there, and some salary people are putting in some substantial time beyond standard expectations. And this was the CFO. She said, can we give them bonuses? My response is, I don't have, chapter and verse, but it makes sense. It makes sense that you would need to compensate those people. They had some people who could only work part-time because those areas of the business were shuttled, but they've tried to make work for them. And maybe just give them half-day work. What's the justification to continue to give them full pay? Well, I want to keep my full-time equivalent up. Well, I get that, but you also have justification. They have a hard time finding good people, finding the right people that are consistent with their mission. And so I see justification there. I did warn her. I said, be careful about bonuses to, your leadership. You better really have your ducks in a row if you're going to bonus out leaders. I think that's just, it's not within the spirit of this. But so Craig, that's my thoughts about the bonuses. That yes, I think that there's room for that, but I would make sure to document that carefully. So Becky's asking about kind of turnover. I think the same thing there, where again, maybe there's maybe even an opportunity to hire. Maybe this is a time when public can't come into your facility, and you're able to, if you're qualified with an essential business, to bring people back in, do some maintenance. They could use some extra help. You've been wanting to hire that person anyway. It's a full-time equivalent calculation on the 8 weeks following the date of the signing of the note. At least, so I have even some challenges with that, because you sign the note and it still takes half a week before the funds are actually in your account, typically. So is it really the date of the signing of the note, or is it the date of the receipt of the cash? Don't have an answer on that. Yes, and Carrie is asking about full-time employees, daycare, raise, bonuses. I think, Carrie, that's kind of getting at the issue that I was facing with the client in Santa Maria was, can you continue to pay these people? I mean, you got to hang on to quality people. And again, I would look at your justification. I would keep good notes. I would keep them by employee. We don't know if you'll ever need that justification, but if you need it, you won't remember the details like you're remembering them right now. Yes, and good, Joe, to remind Carrie that your healthcare, your dental, your retirement. Also, when you talk about nonprofits that have ministerial status employees, we're looking at those elected deferrals they take out of their pay, 403B plans, adding that back in. Of course, any employer-paid retirement plans, the housing allowance. Those are some factors to make sure you're all in there. Becky asks a good question about timing of documentation. The banks, okay, so at least one of the banks we've been in communication with has sent us a spreadsheet. That spreadsheet was very basic. You just know that that's not the full story that they're going to be able to accept. It's just fill in this spreadsheet, lines 1, 2, 3, 4, 5, and receive your forgiveness. When, after those 8 weeks, I don't have an answer. Joe, I don't know if you've run into that yet or not.
I have not. It doesn't seem like anyone really knows the answer to that question. They're waiting for the final regulations.
All right. So, and Becky asked the question about paying back the unused monies. That's I think you have at least three things to consider. Maybe the middle ground is to hang on to those funds for the 6 months. None of us knows what this is going to look like after 6 months. And it would cost you 1% interest, but that's low interest. And that contingency, if you pay it back, you're not going to be able to, of course, get those funds back if you truly need them. Other entities feel like, we've never done this before. I have a nonprofit client that's never borrowed money and is participating. So the board considered it carefully and they've approved it. But my guess is they're going to pay it back the moment they know what's left. So that's about how I can respond there.
Cory, I've got a quick question for you.
Yes.
We ran into with one of our clients. We applied for the loan, and I'll just make up a number just for discussion purposes. The max loan calculation was 170 grand. But as part of their application, they were estimating what they thought they would spend over the 8 weeks. And they only could come up with like 150. And the bank only gave them 150, not the 170. Have you seen that before, where banks were not giving out the full max loan?
Early on, I saw some confusion by banks where they were starting to ask that information. They were saying, we need to know what your utilities have been running you. We basically responded to those banks saying graciously, actually, you don't need that information right now, or can't remember, maybe it was, do you really need that information right now? We'd like some time to put it together. And they no longer were asking for that information. I've not heard of any bank cutting back on not permitting the full, PPP calculation. That's a new one on me.
Yeah, I was pretty surprised to see that. And they were pretty firm on their stance, but no other banks, and we've dealt with a lot of them, have done that.
Right. Similarly, we've had to help some banks with the housing allowance. So we've cited some sections within the CARES Act. It probably was overkill. It's probably the accountant part of me, but I gave all the way down to the, section such and such, subparagraph. I was having a little bit of fun probably, but it worked, so I've kept doing it. Becky asked a question about healthcare cost. The CARES Act does say group health benefits. And this has been a big tangled web ever since Obamacare came into place. I'm sorry, the Affordable Care Act came into place. But it does say group health. If you're deducting, if you truly have something that you're deducting, it's likely that is falling under that group health category anyway. But if you've got, one employee who's in maybe a healthcare sharing plan, another one's on the exchange, another one's on a spouse's coverage, you don't have a group health plan. So I'm thinking that that's going to be hard to be able to utilize.
Hey, Cory, just to go back to that whole thing about banks, I think it's important, and you and Joe both have basically said this, it's a little bit like the Wild West. The banks truly do interpret things quite differently. And frankly, some banks are going to lose relationships with people because of the way they have mishandled the PPP. But it truly is amazing how differently they interpret things. Now, there may be a convergence over time, but it's to be noted that your bank may be misinterpreting and being overly strict or potentially the opposite of that during this time of uncertainty. Would you guys confirm that?
Well, we can certainly confirm that. And also I'm concerned about that yet, because while Joe's example of that client being shorted on the amount that could be borrowed, if it turns out that, basically 100% is forgiven and they don't owe that difference, I suppose it's okay. But the next stage is more critical. Could I put it that way? That the banks understand what's permissible, that we understand what we have to do to document, that in some cases we graciously push back to say, no, according to the SBA interim final rule, April 14, transportation costs are included within utilities. Here's the costs, here's our leases for employees that were able to stay on the road. Here's our gas expenses, and cite chapter and verse. If you can cite the SBA rules, it might take a couple of days for them to get it back to their attorneys to say, scratch our heads, can we actually allow this? But they're trying to understand it. I don't think they're not, it's not like this is their money. So, you know, they're just trying to make sure they don't incur liability themselves, of course.
Sure. One question that came up, Cory, was somebody on the call asked a great question. Their sales are down significantly. I don't think it's in the chat, by the way.
Oh, okay.
Their sales are down significantly, and some of their salespeople are heavily dependent on sales commissions. In the spirit of keeping those employees whole, et cetera, the question is, if they were to make up the difference, or at least a portion of the difference in their commissions, even though their sales numbers did not justify that, would that be allowable under the PPP forgiveness?
I think there's a couple things to think about that. Obviously, you would be communicating that this was a temporary situation. Maybe you're typically employee, you are a straight commission. When you close the sale, you get your commission, or when we actually complete the job, you get your commission. But we're making a temporary change here. This is an advance, but it's not a loan. I'm just trying to think of what would I do if I was trying to help to make sure this was tight as possible. I would structure the advance situation to say, okay, this is temporary. This is an advance on your future commissions. This is not a loan. In other words, if you end up having to, you know, there's just no more work, that employee is terminated, there is no expectation that they would pay back, that was truly compensation to retain your talent. I think you're in better stead with that. But I have to admit, I mean, some of these things you don't get clarification, and maybe we never get clarification, but that's going to be potentially some of the tug back and forth with a bank, and it's not going to be the loan officer who's going to take the risk for it. It's going to be their legal staff that's going to clear this. But I think that's a good thought, Jim, that we've got to retain our talent, and that would be, to me, a key justification. Also, the fact that yes, this is an advance on your future commissions, but it's not a loan.
And I think
Bill?
that there's some fear, Cory and Joe, particularly, that, wow, if this does not get forgiven, then maybe people are going to say that I did this fraudulently, and therefore there may be penalties, civil or otherwise, that indicated I was trying to scam the system. And in fact, I think if you do it in good faith, I think you guys correct me if I'm wrong, you do it in good faith, you document, there is a logic to it. Even if it is not ultimately forgiven, there seems to be little to no risk that this would be considered fraudulent. Please correct me if I'm wrong.
Jim, I would agree with you. Bottom line is, even if none of it got forgiven, it's 1% money for 2 years. And that's the cheapest money you're going to get. But what Cory said about the certification process, yes, we've spent a lot of time applying for this loan, but the actual certification process after the 8-week period, that's where the real work begins to get this loan forgiven. So what Cory had mentioned earlier about, making sure your accounting system is consistent and up to date and accurate is going to be absolutely critical. Not as much so as having a separate bank account.
Joe, you've probably heard that. Some say keep a separate bank account. Your thoughts
Yes,
about that?
I've got a paralegal that we've hired specifically for this whole COVID-19 crisis. And the attorneys that she is working with are saying that because of the way the CARES Act is written to create a separate bank account. So we went back and forth between the two. My CPA gut tells me you don't need to do that. But just from a logistical standpoint, it might be easier. We've got a pretty big nonprofit that we work with, and they were creating a separate bank account, which we felt like was prudent.
Mhm.
But then they wanted to transfer their payroll system to be drafting out of that new bank account. And we said, no, don't do that. That's way too much work.
Sure.
Create the separate bank account, run your payroll, and then make one transfer from the new bank account you created into your operating account. So your operations stay the same. Nothing changes,
Right.
except for that transfer occasionally. That way there we're trying to hit both issues, what the lawyers are telling us to do and what my CPA knows tells me what to do. Does that make sense?
Yes.
Cory, I have a question, and I'd like for Joe to comment also. It's really not a question, it's a comment that I'm asking you for. I've got a client who is in the trade show business. And of course, you know that trade shows are not going to be back for a while.
Mhm.
So they've got their notification. They're going to get their money in a couple of days. So they said, we have no other choice. We're going to pay we have no jobs. So, but we're going to bring our people back for 8 weeks. We're going to pay them, and then we're going to lay them back off because we have no business afterward. Your thoughts?
Well, they're kind of creating their own unemployment fund, essentially, is what it amounts to. Their justification hopefully will be to retain that talent. It is called the Paycheck Protection Program. So I don't know of anything that would say, oh, that's fishy. It's like the money is going to the common man, so to speak, that's working the trade shows. Again, I'd be very careful about any sort of favoritism toward ownership, but that would seem to fit. Now, is that the best strategy? It's hard to tell. Just speaking hypothetically, would the employees be better off with just going on unemployment? What about the potential savings with regard to the FICA tax concerns? The employees are not going to have FICA tax concerns with unemployment. With the payroll, they're all paying in 15% of that money going into the Social Security Administration. I'm kind of getting into the weeds there, but
Would you suggest maybe taking the 1% loan and waiting till business comes back, and when it does, use the money then? I mean, it won't be forgiven, but it's like Joe said, it's 1%.
I mean, right. If we were not concerned about the money running out, you would time it. You would probably, entities like the one you're discussing would delay the closing on the loan until they were ready to get back in operation and incur those transportation utility costs and such. You cannot use more than 25% of the funds to pay. You're still going to pay your rent, let's say, in your facility, even when you're idled. but that can't be more than 25%. But unfortunately, yes, there's another, whatever that difference was, a chunk of money being added potentially by the Congress now. But the concern is that's going to quickly be gone. But you're right. It's a 1% loan. It's, you know, a balloon in 2 years. Joe?
Well, we've got a couple of clients, Steve, that have not exact situation like yours, but similar. And what we had to do was determine from a strategic perspective, is it better to furlough your employees, let them take advantage of the state unemployment plus the $600 a week on the federal side to keep them going and take care of them for a month or two. And then once the funding shows up, then you rehire them. But do you rehire all of them? A lot of times you can't. I mean, you can't pay someone to sit at home and watch Netflix. So you time that and you determine who you hire back. And maybe it's, okay, I'm going to hire 40% of my workforce back. The other 60% is going to have to stay on unemployment in order to utilize them because they need to do something to work. I don't think it's supposed to be a handout, but the intent of Congress was to keep people on payroll. And that's the whole purpose of this, which is why you've got that 75% rule. And then optimize between the employer retention tax credit and the PPP. That's why you're hearing in the news media some shy of the social media pressure that they're getting. They're returning some of the PPP money because I think they're realizing that the ERTC is actually going to be better for them, but they're getting a lot of mileage from the social side of this thing by returning it. So it's different for every client. And the timing is different for every client. Maybe you only have your workforce on unemployment for 2 weeks instead of 4 weeks or 6 weeks. And when are you going to get your funding? Some clients aren't going to get their funding for another 2 weeks. Well, they could have had their employees on federal unemployment for 4 to 6 weeks by now. So that's why you've got to kind of balance those and figure out what is the best option for each client. Does that make sense, Steve?
It does. Thank you.
Joe, what are you seeing in South Carolina as far as how quickly these federal unemployment funds are being disseminated out to families?
They're not happening fast, and that is a problem. And I think there's a lot of noise starting to generate over the fact that people are not getting these unemployment checks that the media has been talking about. So we're kind of in a wait and see mode, but that's hard to do when you're living paycheck to paycheck.
Right. Carrie asked the question about more information about the student loan forgiveness option. It's really a pretty simple section of the CARES Act. There's been a long-standing provision in the Internal Revenue Code to allow an employer to establish an educational assistance program where up to $5,250 per year can be paid out on behalf of employees who participate in the educational assistance program and it not be taxable. So that's a long-standing provision of the Internal Revenue Code. What the CARES Act has simply done is extend it to student loan payment. So if you've got the resources to do that, that is could be a nice boost to some employees. That and that doesn't have to happen right now. You've got 2020. You know, maybe it's wait until the fall to see what your resources look like, and then consider that.
Well, I've got a 9:54. We certainly don't want to belabor this. Is there anyone, we try to keep this to an hour. Is there anyone who has a final comment or burning question for our folks? This is being recorded, by the way, and available. We will send out the recording so you can review it again or pass that along if you wish to.
I do have a question. So we have been officially approved. We haven't gotten the funding or anything for the PPP. So what I'm hearing is really the justification side. So if somebody's getting paid significantly more than they historically have been paid, like I'm basically what I was going to do is take what we've been approved for, divided by the 8 weeks, and make sure that we get that used up on a weekly basis in 8 weeks. Whether that be bonusing just regular employees or commission or whatever. But if there's some reason for doubt and justification, is that kind of the crux of the matter? I mean, whether they would forgive it or not, if they go back and look at, say, well, that employee only made X amount last year. So does that make sense?
Yeah, Craig, I think, and I have not read any guidance on this, but my gut tells me, and I'm sure Cory feels the same way, that you're going to have some kind of a limitation. So if you've got an employee that you are paying, $50,000 a year, 50,000 divided by 52 times 8 is what? Whatever that number is, if you pay that person over a certain percentage of that, I suspect you're going to be limited. Kind of similar to the employees that you're paying over 100,000 to, you're limited there. I think they're going to do the same kind of limitation. I haven't read anything, but I suspect they're going to try to come out with something like that to keep fraud from happening.
I'd say also it sometimes it depends on how deeply the bank, for example, gets into the weeds of this type of calculation, and maybe it won't haunt you, but on the other hand, that's not the way you're trying to operate. You're trying to operate within the law and wisely, that if you ever were asked to justify what you've done, you are ready to pull the file and say, this is what happened and why it happened that way. That's just a good way, frankly, to do business. And as your accounting people would probably feel more comfortable, versus just dividing it by 8. And you've got potentially other expenses you can use to absorb some of that last 25% as well.
Yeah, we run a service business, so I don't see any reason. If we could pay for gas, like we paid over $22,000 last year in fuel, so we could certainly use it towards that if that's a legitimate way to use it.
Yeah, that's what the SBA interim final rule said. So
Okay.
There'll be some clarification on that, I'm sure. But if you're a service business, you're paying out not just gas, but is it your lease payments? Is it is it auto allowances for employees using their own vehicles? Maybe.
Okay. Thank you.
Hey, Cory, this is Johanna, also with Ideal HR. And, one of the things that I've kind of been tossing around with some of my clients and curious as to see what the rules are going to say about this is instead of bonuses, possibly paying out or cashing out PTO time. So where we all know for those of us who still have people working, who don't want people to be taking time, or normally they would be taking their vacations now and they're not going to be able to even maybe later. How do you feel about that being kosher or fitting into these potential regs?
Yeah, no guidance on that. It's legitimate money that you owe to those people. And so you certainly have more justification for that than just arbitrary bonuses. Some organizations are going to be giving bonuses because they just feel like their employees have put forth extra effort. Here, your justification might look something like, well, normally you don't get your PTO until you actually need it, but we're going to provide you some of it to, and our justification is partially to help you through some of the extra costs you've had to have because of COVID. That's a subjective one, and probably not going to get guidance on that.
Well, of course, I'm going to wrap this up, but one of the things, Johanna, and all, what I think you ought to do to the extent possible is document 110%, 120% of the monies, assuming that all of those fit into the categories, the gray area and the not so gray area. And in fact, if something gets refused, you still get the whole thing forgiven. But as it has been mentioned several times, let's say I get 90% forgiven. What's so bad about that? You know, so. Anyway, I want to thank everybody. I want to thank Cory, especially. Tim, thanks for introducing him to us. And Joe Montgomery, thank you for joining two great resources for us. Please look for this recording. And I want to remind you of our Leadership in Challenging Times series, which continues this Friday at 9 a.m. Eastern Time. Thanks and have a wonderful day, everyone.